Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a massive week across global markets. We've got all the macro headlines and crypto news to get through. Fantastic chat with Martin North yesterday. As you guys know, the YouTube algorithm doesn't suggest our videos anymore because we don't put ads in them. So, look, these videos used to get 50,000 views, so please share them with friends and family who you think are interested in the housing market or the economy, because we rely on word of mouth these days for, I guess, all our content rather than the YouTube algorithm. We do welcome a few thousand new subscribers again this week. Plenty of people coming into the crypto space, as well as just getting interested in what's going on in global markets, I think, with all this money printing at the moment. Now, I did want to introduce our referral program. I know heaps of you have been waiting on this, so you can earn $50 for each person you refer now to become a member. So very popular already. We've had plenty of you take this program up. So that's there, a way to earn money from Nuggets News if you're interested. Particularly for those of you that have got plenty of friends and that are interested in going down that rabbit hole at the moment. I did want to show some of our research to you. So we've had a big focus on the on-chain data side of things and really breaking that down. So we're going to have more of those episodes on YouTube as well, maybe once a month or so. But these detailed reports, so Glassnode are now doing an on-chain report for members. We've got Checkmatey, so welcome to, he's a big Decred and Bitcoin bull. He's welcoming, well, we are welcoming him to the Nuggets News family. Welcome aboard, Checkmatey, but he's running over some of the on-chain stuff as well and a bit of a report. So, look, we're really juicing what pro members get these days on the top subscription, and I can't recommend that enough. This is literally the daily research the team do for me. This is what lands on my desk and what I watch and consume every morning with these crypto research calls and all this, the top level research reports and analysis. This is all designed to really save you time. So these are, 5 to 10 minute videos, and this is where you're going to find your alpha. That's the projects that no one else is talking about yet, very early stage. The airdrops that you get alone these days are covering the cost of your subscription. So the platform goes from strength to strength. I'm just so impressed with what the guys are doing behind the scenes, the big team in Melbourne. So be sure to check that out if you haven't already. And all that research leads to these sort of returns. So this is just another project. One of our members was saying 10 or 12 projects now have hit 100x return. So you guys know that we were there talking about Engine when it was 3 or 4 cents, talking about accumulating it, and then sure enough this week it hits $3 or $4 even. All those gaming projects that we said was the next big theme a year ago are all really coming to the floor these days. So well done to everyone that got on board Engine. Let's get into the local news. So the jobless rate in Australia surprised in terms of the number, but the speed that it's got back to 5.8% as well. So if you actually dig beneath the surface a little bit, it's a little bit misleading in terms of where those jobs are, full versus part-time. It really is the end of this month when we're going to see a bit more of a real picture when we have the end of those banking holidays and the end of JobKeeper and so on there. Martin and I will obviously dig into all of that for you, but here you can see Australia's done really well. New Zealand, Japan, the countries that have returned to their normal employment levels versus across Europe there and even the United States, really struggling. A lot of people will be surprised by those figures compared to these figures when you look at the US stock market at record highs. So property sales volumes have lifted sharply this year. A couple of reasons for this, isn't there? Everyone was in lockdown last year, but the turnover and prices are absolutely booming. And that, for me, it's purely a result of the low interest rates and all the money printing that we said would be the case. Such an important article and topic are these responsible lending laws. Literally, Commissioner Hayne said, enforce these laws, as they stand. You can't make it any clearer. The guy that ran the Royal Commission, and here we are doing everything we can to repeal these responsible lending laws to get the economy going. I mean, we've just seen something like the biggest increase in lending, 44% ever. House prices are going up, they're predicting 30% in the next 2 years. Like, what more do we want? Do we really need to be lending less responsibly? when we've just had that Royal Commission. Again, none of this makes any sense. Even the fact that the central bankers and politicians are almost saying, no, that's not the case. It's not a bubble. They're not overpriced. All that money could just be going into all these other things. If houses were worth half as much, we'd have all that money going into schools, science, research, healthcare, more hospitals. But no, let's put as much money as we can. Let's milk every last dollar from the average person's income just to put a roof over their head and to live within an hour of the city. It's going to come back to haunt Australia in so many ways in the future. Bank of Mum and Dad becomes a top 10 mortgage lender. They've done well. They've benefited from the boom, and now they're kind of passing it on. Are the kids going to look after mum and dad as well? Because they're the generation that aren't going to have all those assets. And they're not accumulating wealth at the moment. They're getting further and further into debt. So that's going to be a big transition as well, and maybe reduce a lot of demand. Think about a whole generation that it might just take mum and dad's house rather than buy or build a new house. So we can keep borrowing from the future, but there's going to be repercussions. So here we have it, the RBA noting that it warrants monitoring at the moment, but they're really not, I guess, acknowledging that it's going to be problematic and that they're probably going to have to put in those measures that, remember they put in the measures and then they took them away. Now they're looking at putting them back. So it's all this back and forth. Anyways, we're looking at big tourism to get Australia back online, but also migration. So they're the things that are going to be the big focus to get people coming into the country. But also a lot of people now want to migrate themselves to these more rural areas. So remember in China, they went through that big phase of having to get people to try and come and live in the cities. I wonder if Australia will be going through something like that in terms of getting people from overseas to come and live in our cities. Malcolm Turnbull, look, I do like Malcolm. He normally has some good things to say. He's been attacking this need for, again, digging into your superannuation, which is all about your retirement, to buy property. Everything in Australia is how can we put more money into property. So I'm glad some people are speaking out against it. Aussie pension funds, they are some of the biggest in the world already, but there's a deal here to create, I think it would be, form the nation's second biggest funds if Q Super and Sun Super merge together. Coming under regulatory scrutiny, but if you're a member of either those two funds, just be aware that they may be joining up together. CBA will undercut Afterpay in his buy now, pay later war. So this is, again, something that I've said is a lot of fuss and there's a lot of song and dance about a glorified credit card, really. You're paying later, and if you pay it on time, there's no fees. I don't even see the difference to the credit cards, to be honest. And now the banks are coming in to cut that lunch. Just like overseas, we've seen a lot of the other businesses when these guys like Afterpay have tried to expand overseas, other competitors just sort of come in. So I think they're going to be more heavily regulated. And now the big banks, as always, they're going to sort of cut out these smaller businesses as well. So just be aware of that if you're a shareholder and you've done really well from some of those. News Corp and Sky News have reached a deal with Facebook. The government reached a deal, so continues to be a bit of a truce in that little area there. But the big one is the ongoing escalations with China. So this barley row has gone to the World Trade Organization now. We've seen iron ore prices slip. China's talking about cracking down on pollution. So that's going to be a big hit as one of our main exports. Even crude oil's finally had a big correction lately. So these things... there's a talk about the commodity boom, but that is really dependent on a few factors of the global economy unlocking and everything getting back to normal. It's that fine line between actually booming and opening up or the inflation versus deflation argument for the cost of all these commodities that Australia really needs to be higher to benefit. New Zealand, you wouldn't have picked that they were going to be going through a double dip recession, but just like us, and particularly Tasmania, there's a lot of similarities there with really reliant on tourism, food, wine, all that produce. And so New Zealand are entering that double dip recession, whereas I don't think any Aussies have really got that front of mind at all, the fact that we could very easily turn down again. Australia's found some new partners in Saudi Arabia, so they continue to look for these other trade deals. to replace China. Now, China's had this roaring economy, industrial production and retail sales growth beating the forecast, but there's still a little bit of distortion in the data. They've got a lot of those bad debts underneath the surface, so record defaults are hitting Chinese firms. Liquidity is tightening. The Chinese banks always sort of step in and pump markets full of liquidity when they need to, but they're rolling over a lot of these loans, mid-term. Depending on what's going on in interest rates, that's the same situation as what we're going to see in the US with those all those zombie companies. So chip makers, they get these state funds. They're not going to let really important businesses, just like in the West, the airlines get all the bailouts. So same thing in China. There's such a shortage of chips at the moment. They're going to get these state funds and bailouts. Tough talks between the US and China. So Biden got off to a little bit of a rocky start. Everyone's hoping that he's going to get along better than Trump did, but he didn't have the easiest time getting up the steps to Air Force One either, if you've seen that video clip as well. Saudi Arabia's bold new plan to rule the hydrogen market. So I kind of like that someone like them that's just been all about oil is really making a move into that space as well. I just compare it to Australia that's been all about the coal, for example, and yet we seem to be so reluctant to be world leaders in something like these other markets where it's these Saudis, there's decades and decades they've been the oil country, and I just love the fact that they're going after all these other things and happy to spend money on it. India's FX reserves cross Russia, so they're now the fourth biggest holder of their US dollar and other forex reserves. So this is a good buffer. This is what they want. This is what countries need to keep a strong economy, currency, to be able to balance yours against the US dollar and the major currencies compared to these other countries we've seen that have drawn down their forex reserves and they're going through hyperinflation. A lot of emerging markets are bracing for these rate hikes. If we start to get inflation, other countries don't have the luxury like the US does, remember. So if they actually have spent too much and inflation starts to get out of control, very easily they can tip into that hyperinflation, particularly when there's money chasing fewer goods. And that's when they will have to raise rates as well. And that can hurt these emerging markets. Governments that have been loaned money from the IMF, everyone is in debt at different stages of the cycle and the food chain, and they can all get crushed if interest rates are going up. So Christine Lagarde at the ECB, she's talking about the governments having to get this fiscal stimulus passed, get into the hands of the people. The US has got that big stimulus bill through, but they've still got to finalise a lot of the more local sort of stimulus payments as well. And we've seen homelessness increase for the fourth consecutive year in the US. So we know that all of this is currently just leading to inequality. So Biden is eyeing off that first major tax hike since 1993. I don't think there's a lot of talk about this in terms of the stock market. Maybe that can be the next focus or narrative, particularly if things start to correct a little bit. I think this is something that could weigh on markets in terms of tax hikes. Powell is disputing that low rates lead to asset bubbles. He's saying that there's no need to react to rising treasury yields either, so they're still holding off. The market is going to hold them hostage until they start to print money to buy more bonds to get those yields down, I think. Janet Yellen, this was always going to be the play, wasn't it? That they could bounce off each other now that she's in office. And she says that inflation risks remain small and manageable. I just can't wait to see where this all goes if inflation starts to get out of control, because like I said, as central bankers, when they say things, you almost want to bet and do the opposite. And when smart people like Ray Dalio are saying the Fed will need to buy bonds as stimulus has already started to increase all these yields, I'm backing Ray over Janet Yellen and Jerome Powell that have been wrong at every turn. So the Fed have actually let go and let expire these exemptions that the banks had about those leverage ratios and the capital controls. So that's going to force them to buy more bonds. And hopefully, they want them to do the heavy lifting for them so they don't have to do QE. But also, the US budget's got this huge deficit. Current account deficit and the whole, the budget deficit as well. So with their trade and within the local sort of economy. And so by forcing the big banks to buy more bonds, they're hoping that they can help this situation as well, because at the moment they don't want it to look like they're the only one that are buying all these bonds, because then you're just directly monetizing the debt. That's basically modern monetary theory. All your trade partners start to question the strength and value of your currency, and as you can see here, it's got up to quite a large percentage, as we know. So during COVID, we're talking trillions and trillions of dollars. So now we're up to a very large percent of GDP, by historical standards. So the US dollar net positioning, it has come off a little bit. So remember, we had a record short position by just about everyone. Non-commercials, asset managers, leverage funds, just about everyone was short the US dollar. And then we've got this big bounce. So we had a bit of a short squeeze. But ECB, they've said that they're going to increase their bonds. So all of a sudden the US dollar looks relatively good while the Fed are holding off doing that next level of stimulus or money printing. Now cash levels are increasing. So remember how I keep saying there's like trillions of dollars sloshing around. So even though markets are at record highs, there's so much money that is still looking for a home. So there's cash levels continuing to rise out there from these money market funds. And we've seen a lot of money flow in. This is an absolute monster record here. Inflows into stocks. This is 1.6 trillion so far this year into global equities. So this just shows you how much central banks are having to do just to almost keep things where they were. Remember we spoke about this, how it would cost, hundreds of billions, and then the next round it would be trillions. And then if there's another downturn, they're going to be having to spend tens of trillions of dollars just to stop things from falling because of how powerful all the natural deflationary forces have become. So not only that, you've got people that are leveraged up. Look at this chart. Once again, this is the change in margin debt from a year ago. So $250 billion of people that are leveraged up in the stock market. SPACs, these speculative vehicles, they've already broken. So this is just 2021 through to March 16. So we're not even a quarter of the way through the year. We've already broken that record of 80 billion from last year, of the amount of money that people are just speculating on these early stage blank check sort of companies. Now, this is a great article about how much investors or firms are paying for the order flow to fleece those retail investors, on all the Robinhood apps. So this is a letter from 2004 where it's basically saying that the practice of people paying for order flow creates serious conflicts of interest and should be banned. So you can pause and read that in more detail if you want. But retail traders now account for almost half of these funds of all the volume each day that gets put through the stock market. That's crazy. So you look at all this, Charles Schwab, Robinhood, E-Trade. This is how much they're getting paid from all these others, and these are the people who are paying them. So Citadel at the top of the list there, Morgan Stanley, they're paying billions of dollars to know what retail are doing, and they can front run those trades with high frequency trading. And yet this is all sort of just a bit of a grey area. It's not illegal. 1.9 trillion transactions in penny stocks last month. This is an increase of 2,000% from a year earlier. Like the Great Depression. This is when everyone was obsessed with stocks. If you haven't seen those documentaries about back in the 1920s, retail investors speculating on penny stocks. Corporate buybacks have come back with a vengeance, just like I was predicting when they were allowed to. They were going to start doing huge amounts of buybacks. Whenever we see those big buybacks, obviously insiders trading is ticking up. Whenever prices are at those highs, insiders tend to be selling to retail investors. And here we've got these real yields. So they've really risen at the long end and fallen at the short end of the curve. You see the different maturity duration assets here. So on the 1 to 3 year, they're real negative rates at minus 2.6%. Gold has continued to trade inverse to the US 10-year real rates, just pulling back a little bit at the moment. So not the best sort of conditions for gold there, and it has slipped because those the yields are spiking, interest rates are up, and gold doesn't have that interest rate. This is Wall Street silver. This has really gained a bit of momentum. So the whole GameStop thing kind of got a bit of attention on this area. sort of Reddit traders, but I don't think it's the last you've heard about it. So they didn't break the silver market, but I think this is probably something we're going to look back as a turning point when I think these kind of investors are going to keep pushing, and we probably are going to see that physical silver market break sooner or later. So this is something I did want to mention. So this is the guys over at Ainsley Bullion with the gold and silver stuff. They have got their gold and silver tokens. You've probably traded them, but finally they're getting these integrated into the world of DeFi, which is awesome. So partnering up with OpenSea, these guys are creating stable coins backed by real world assets. So the fact that they're going to have gold and silver, I think, they've teamed up with Value DeFi to do this. So you're going to have a liquidity pool with your gold and silver tokens, which is awesome. So well done to the guys over at Ainsley. Keep an eye on their socials for an official announcement tomorrow, I think. But anyway, they've given you guys a little bit of a exclusive, bit of an early one there. Now, again, if you didn't see at the start, we've launched our affiliate program, guys. Everyone can head over there, all our members, and you'll get a unique link. Sign up your friends and family, and you'll get $50 for everyone you refer. So, if you want me to keep paying you money, keep referring people and make sure they get their crypto education started right. And these research reports, these have become an absolute favorite of mine. This is where you're going to find all the hidden gems, the best projects. This is Nathan, new full-time employee from the United States. He's based in San Francisco. He's there at the bleeding edge in Silicon Valley doing research for all of you guys and for me while we sleep. And I wake up in the morning to all the latest news. And so if you want to get your eyeballs on what I get my research from each morning, head over and get these research reports every morning from Nathan and the team. Aussie government's allocated $5 million for these blockchain pilot projects, so that's pretty cool stuff. I know there's a few supply chain, emerging technologies. Good to see Steve get involved there, CEO of Blockchain Australia. So hopefully there's a few good projects and more money come from that. This is the Thailand Central Bank that have declared that they're the only ones that can do pegged stablecoins. So this is Terra money, a great project, and one of Mike Novogratz's favorites as well. Basically saying that Thailand are coming out and saying you can't do that, and it's a little bit like what I predicted that China would do. Come out and say to anyone that's doing a digital yuan, like a pegged Chinese stablecoin, that you can't do that. So this is going to be a precedent in what happens here. Definitely one to keep your eyes on. Mazari's talking about a fresh wave of crypto regulation that could be imminent. I think just you want to get the regulation right, definitely for the ETF, but there's just so much that's just changing in terms of banks using protocols these days and lenders. Whether it's corporate projects, they definitely need to get that infrastructure in terms of all the regulation right, the backbone, before it just takes over, because it is going to take over the system within the next 1 or 2 years completely. One of the Facebook co-founders of the digital currency project has departed. I've been predicting that I don't think this one is ever really going to go anywhere. Robinhood is growing its crypto team hugely this year, says the CEO. They want to take a bite out of Coinbase, apparently. Now, Coinbase actually settled with the CFTC over their old trading practices, where they had a couple of bots trading with each other. I'm not sure how bad it was or whatever, but they're going to pay a $6 million fine to settle, and they've actually pushed back the direct listing to April. So I'm not sure if the two were related or whatever, but that's going to happen next month. Bank of America sees DeFi potentially more disruptive than Bitcoin. Big call. Anchor begins its countdown to launch this bank-beating DeFi savings account. So a lot of apps, and even, I'd love to see Bamboo, that I'm doing a bit of work with. Anyone that can have a nice, easy way for people to get these high yields through stablecoins in a little app. Just another reason why people are going to move out of the big old legacy banks into these sort of fintech crypto to get a better yield. Stocks of Bitcoin. So JP Morgan offers these Bitcoin exposure through an ETF in sheep's clothing, as they're calling it. So they're creating kind of like an ETF, like a fund that's full of all the different like companies and stocks that are playing around in the Bitcoin space. So people, this is kind of what you've got to do. You've got to get a little bit creative until there's that ETF. Grayscale are offering new trusts in plenty of our favorites. So, what are the themes? DeFi, Web3 with Filecoin. It's no surprise that money is flowing to these projects that we've been talking about. Mana, it's had an absolute boom lately. So great to see they're continuing to add. Basic Attention Token was the other one, and Live Peer. Brazilian Stock Exchange approves new crypto ETFs, so just about every country in the world is probably going to have one. I've heard that there's one coming in Australia even within a few months. Everyone's going to beat the US to it. South Korea crypto exchanges, their volumes have now surpassed stock market volumes. Now, again, probably a sign of things to come. It would not surprise me to see DeFi and all these derivatives and assets surpass the US stock market trading in the future, in coming years. In Australia, it's literally, our stock market is going to be on a blockchain, or it was meant to be already, but that is coming. Billionaire hedge fund mogul Alan Howard is a shareholder in CoinShares, so more and more this big money is just moving into this space. Every investor is going to demand exposure to this sector. FTX are actually looking to purchase Miami Heat Arena, so FTX Stadium. FTX Arena, is that what they're looking to call it? Anyway, this is just going to be in their face, in everyone's face, in the middle of a bull market. Hopefully they become the FTX users as well and buy some crypto. Alameda have invested $2 million in market maker Efficient Frontier. So they continue to either acquire or build upon, Solana, Serum, Oxygen was another one they had recently. They are really getting involved in this space from the CFI and DeFi level. Alchemex announced a $5 million raise led by CMS, again, Alameda in there as well. So this is a bit of a DeFi protocol. They're looking to do these yield-bearing assets. This is one that I think we've covered in more detail in the group recently as well, if you want to have a bit of a read-up about Alchemex. I know I've seen that in my research. Balancer has hit a new all-time high. They've trialled this gas refund program. Now, obviously, when gas is like $200 to do some of these more advanced liquidity provider transactions, then gas reimbursements are going to be very, very popular. So well done to the guys at Balancer there for subsidizing gas for everyone. Hackers have been targeting NFT marketplaces. Don't the hackers always just follow wherever the money is? So just be careful there, guys. Like always, if you're using these websites, make sure you use good security practices. 1inch have brought out their version 3 protocol, again, to save people on gas. Akomi's been booming lately. Plenty of you have been flipping even their giveaways and airdrops. I know people who have made 1,000% in a day flipping some of these Batmans that are going for sale at the moment. So it's a very hot space. Well done to the guys at Red Fox. This announcement came out. So Gibraltar, they're working very closely with Red Fox and the government here to do their stamps. And I think in the future more government documents are going to be done as NFTs. So while everyone's thinking that NFTs are these fad for people paying too much for pictures, this is the real world, showing what this technology can do. Uniswap and Balancer liquidity providers, so that those LP tokens can now be used as collateral in Avee. So you can begin depositing, borrowing, and lending and all that there as well. I just love seeing how fast it's all sort of expanding and integrating. NEM have finally launched that proof of stake layer. Is it their XYM token they've got now, and they're calling it Symbol. So you should have got an airdrop for one if you're a ZEM holder there. Andreessen Horowitz have led a 23 million round for OpenSea. So those NFT platforms are probably the new crypto exchanges. Remember when they went through a boom period and everyone wanted to own the crypto exchange tokens? Similar things currently happening in the NFT exchange space. Some of you will remember Sophia, so she's the AI robot. You might have seen them with Singularity Net as well. So she's created the first ever AI NFT artwork, and I'm not sure if that's already sold or going on auction soon, but I'm sure that'll fetch a ridiculous amount in this current environment. Engine, I did mention that just before, but fantastic to see those guys go from strength to strength. These blue chip gaming projects they've reached this 100x return, just like we saw those DeFi blue chips reach the 100x return. Yes, it's fantastic, and you should take some profits if you ever get 100x. But remember, Synthetics and Avee, the blue chip DeFi projects, went on to, what are they up now? 500, 700, 1,000x. So it doesn't mean that the party's over, but it can mean that people are going to look to take a little bit of profit in the short term whenever people have got 100x. Elon Musk is selling a song about NFTs as an NFT. Pop culture here. Tony Hawk. Yeah, I think he said his knees are getting a little bit too old, so his final 550 Ollie trick will be sold as an NFT on the Ethereum chain. I'm sure that one's going to make him a lot of money as well. I wanted to throw in a little update here about OMG. So a lot of people still aren't aware that they've been very busy on this layer 2 solution. Head over and check out Hashcast. So this is their layer 2. They've got a wallet, they've got a DEX, they've got a messaging service, and they're really working on those fast exits. So one of the problems with some of the layer 2s on Ethereum is that how do you withdraw without a bit of a delay with the trust and security side of things. Showtime. So this is another fantastic platform where you can show off all your NFTs, particularly the super rares and those other platforms. A lot of people don't know how to look at what NFTs are in their address. Doesn't always show up with MetaMask. Cool little chart here. This is just showing the different DeFi yields available. So you've got Badger, Pickle, Value DeFi we just mentioned before, Barn Bridge as well, and Harvest. So keep an eye on, if you guys have got your finger on the pulse at the moment. There's so many returns to be made in these high yield liquidity pools, and just keeping an eye on where the volume and liquidity is currently locked and chasing the specials. We did see a bit of a phishing attack. So this was Pancake Swap and Cream that were affected. People going to the websites being redirected to a fake website, and what they're doing is asking you to enter your private key and backup phrase, and the alarm bell should go off. My voice should be in your head saying, never give out your private key and backup phrase to anyone ever. Okay, full stop. A hedge fund CEO coming out saying that Ethereum is now racing towards being the foundation of a new global financial system. It's very exciting to hear mainstream asset managers start to talk like this after years and years of believing. These are just crazy numbers from CoinGecko. I think they've become, I'm not sure if they're more visited than CoinMarketCap, that's now owned by Binance, but I really like CoinGecko, I think, more than CoinMarketCap these days. Great team. 120 million plus page views, 8 million monthly users. We're seeing these stats that are up, but I'm still not entirely convinced there's the sort of craze and euphoria arrived just yet. Deflationary ETH2 could flip Bitcoin. Mazzari's now talking about that as well. This is all about that fee burn and the stock to flow that I've been talking about for a couple of years. That's going to be better on Ethereum than Bitcoin. You can now send Bitcoin with your cash tags on Twitter via BottlePay app if you check that out. The SEC's got 45 days to respond to that Van Eck Bitcoin ETF. I've just got a feeling they're not going to pass it just because it's kind of what they like doing these days, but the US just being left behind. So retail flow has exceeded institutional investment according to JP Morgan. So I'm not sure if that's a good thing. We'll look at prices in a second, but retail money has now surpassed institutional money this quarter. Institutional was really strong in Q4 2020, but it's just settled down a little bit. Morgan Stanley's become the first big US bank to offer its wealthy clients access to Bitcoin funds. This is a game changer. This is bigger than an ETF. I'm going to have a special guest on that's at the coalface in the US, a mate of mine. He was one of our best interviews of all time. And you guys are going to enjoy that one about why this is bigger than an ETF, this announcement, and that'll be this week. CryptoQuant, they've made a few changes to their alert service. Remember, we had this big debate about whether or not an internal transfer counts as a deposit to an exchange, and some people blaming the sell-off because that happened. So they are going to change the way they label a few of their data pieces there, but I think it's all a bit of a fuss over nothing. This is actually mainstream news. This is the pace of flows into Bitcoin funds, and like we just saw, the institutional demand has slowed, and it peaked at 600 million, and it's down to 200 million 4-week average. So this is why I've been saying that I think a correction might be kind of on the way. Exchanges, 100,000 new users a day, Willy Woo tweeted out last week. But I just don't see how that can be the case when you've got these retail volumes. So this is the volumes that are done through the PayPal app. Remember, it peaked at $240 million when price peaked on January 11th, around that time. But now it's down over 90%. So retail volumes the last couple of days have been about 20 million. So, these are down over 90%. And that just doesn't tell me that there's this crazy, crazy retail herd that are coming for Bitcoin at present. Deutsche Bank's research shows that Bitcoin is now the third largest currency in circulation. It's already. So that, these are world reserve currencies in the special drawing right basket, like Japanese yen. And Bitcoin is now only behind the US dollar and the euro. So that is really, really cool news. Let's have a look at the charts. Let's bring up a weekly chart of our old friend Bitcoin. We've got those divergences there. We've got a couple of these triggers that I speak about that are firing off, meaning all the momentum indicators are rolling over. We've got this tightening pattern that you can kind of see better on a 4-hour chart, and it just hasn't been able to break out of this so far. So this is what we're waiting for, to see sort of what direction this is going to break. And so far it's come back and revisited here, and this would take us down to maybe 55.60 at the bottom of this trend line. But just that tightening pattern, we want it to have a break and gather a little bit of momentum to take off for the next leg higher. I love seeing healthy correction and sideways action. I just hate it when we have these charts that are just parabolic without having a breather. And look, nothing shows this more so than the shitcoin index. I keep talking about this, I know, but that's because I just am so cautious. When something like this has just gone absolutely berserk, 800% in a matter of weeks, I just get a bit worried. And this has got a lot of coins in there that probably deserve a title better than shitcoin. But look, I just love these indexes on FTX for that reason, because you can get exposure and trade these things. And Benny and I did that video during the week when we were talking about the kind of price action we're currently seeing. But look, members, I'll continue to do those flash updates for you whenever I can. But just at the moment, this isn't healthy consolidation. This is large selling on this sideways action, which would normally suggest more corrective action to come. So look, is it a bad thing if Bitcoin continues to have a bit of a breather? Long term, if we see that huge institutional US money come in, then I think those price targets of $200, $300, $400,000 are on the cards. But that can be a very long process, years away. Guys, I will leave it there. Don't forget our referral program. Don't forget to head over and check out those research reports, those morning crypto calls that I get if you want to see the research and get all the alpha. Otherwise, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.